Welcome to Discovery Watch with John Kaiser.
I'm Jim Goddard. Welcome back to the show, John.
Jim, it's great to be back. I'm still in Vancouver here, and the weather's fantastic.
John, you spent the last week in Vancouver at the Sprott Natural Resource Symposium. You participated in an exploration panel monitored by Rick Rule and gave a workshop on stalking elephants in Nevada, the Pilbara, and beyond. Can you give us a quick overview of those sessions, and are there any Discovery Watch implications from all those?
Well, the exploration panel that Rick Rule moderated was one of the first major events. It was on Tuesday morning, and I was pleasantly surprised in a distinct change of tone in the way Rick Rule is looking at the resource sector. Now, in the last few years at this conference, which is basically companies that Sprott Global has in one way or another financed in recent times and has been supporting, they have been dominated by the optionality type projects. And these are ounces or pounds in the ground that really don't quite make it at the metal prices that we have, which need a higher metal price to end up in the money, and much of the talks in that are all about why cobalt's going to be much higher, copper's going to be much higher, uranium's going to have a big comeback, why gold and all that has been going higher. And the discovery exploration juniors have been sort of like a sideshow. And Rick Rule has backed these companies in the past 7-8 years since 2011 bear market began, but he has typically treated them as, well, I only like you if you are a prospect generator, farm out model, and don't waste any money drilling. Find somebody else to take that heavier risk off the table. And because this is a tough game, making brand new discoveries takes a lot of time and effort. He's insisted on these 5-year warrants. But this bear market has now dragged on so long that even the 5-year warrants are starting to expire. And as far as I know, the stock exchange has not yet capitulated to any pressures to extend warrants, allow warrants to be even longer than 5 years. Now, the mood out there right now is very bearish in the resource sector. You're seeing it in the sell-off in the useful metals markets. You're seeing it in the sell-off in gold. There is this big concern that the U.S. policies with a trade war and all that are going to unleash a global recession of some sort, which in turn, during the interim, there'll be some inflation showing up in the United States as everything starts to cost more because of tariffs and so on. And then you'll see the monetary policy try to cool inflation by pushing interest rates up. And so that, of course, is not good for gold. And then if this triggers a financial crisis where there is no bid for equities, no bid for real estate, no bid for debt instruments, there will be a bid for gold, but it'll be a lot lower than the current price that we have right now. So we see this broad metals market sell-off underway, anticipating a big train wreck down the road. Now, how it exactly will play out, we have no idea. My own feeling is that after the November elections, the midterm elections, it doesn't matter who wins it. If the Republicans retain control, they are going to be in survival mode for the 2020 elections, and to avoid a complete wipeout in 2020, they will put the brakes on the crazier policies of Trump and move back towards stabilizing the economy. And if the Democrats get one of the branches, as the Republicans did in 2010, they will put the brakes on the policies that can be enacted. So I think we're in this wonderful window where the expectation of a major downturn probably is wrong, and that sometime by the end of the year, we will see a significant reversal. Now, this ties in very well with the opening comments that Rick Rule made at the start of our exploration panel. He pointed out that in his conversations with the executives of various producers. A common theme is the lament that we do not have anything in the development pipeline. And then you sort of scratch your head, well, what about all those deposits you guys bought in the last 6-7 years for which you were so punished by the market when gold backed off from 1900 back down to 1200, 1100? What about those? Well, what they're referring to are deposits, relatively recent discoveries with grades that are in the money at the metal prices that we have. And there is a sort of a distinct concern out there that significantly higher metal prices are not in the works. That even if we have this expected downtrend turn out to not actually happen, we're still dealing with metal prices that will be modestly higher, but not substantially higher, so that these optionality deposits, really there is no significant interest in them. And I think this is was part of Rick Rule's sort of shift in attitude, that he's become far more interested in the discovery exploration process. And there was even one little junior at the conference, which is backed by Rick Rule and David Elliott, whose specialty is to generate undercover projects in British Columbia, where the easiest geophysical targets have been picked off. But there's more subtle ones and with some more geophysics, and then scout drilling to see what's going on under the cover in the third dimension in geology. That is now part of the prospect generator farm out model. And that's pretty interesting, because without a drill hole, it's really hard to change a target into a new discovery. But the way the questions Rick Rule posed to us panelists, they were designed to show that there is a new world out there. The easy deposits or prospects, deposits exposed at surface, that's pretty much gone. You're dealing with overburdened gravel cover, sometimes younger volcanic rocks, or even sediments that have buried and hidden so that there's no obvious geochemical signature at surface. This is a new world for discovery exploration. It's one that the old lifestyle companies cannot pursue. It requires a solid technical team. It requires the use of almost big data geoscience, where you compile a lot of information to build out the geological context. So I found this really refreshing, this shift to let's look at discovery exploration. And we don't have enough time to get into all the different questions that he asked and the responses that people gave. But he asked us at the end, give us three favorite picks of discovery exploration juniors, and please at least include some that are exhibiting at this conference. So the three that I gave were Nevada Exploration Inc., which is a personal favorite and which was not at the conference, which has an undercover strategy. And I've recently looked at the company's South Grass Valley project, and I am now more excited than I have ever been that they, through all their target generating work, are very close to making a substantial discovery. But that's for another episode to talk about. The second company was Contact Gold, which has land next to Gold Standard's railroad project at the southern end of the Carlin Trend. And what's going on there is that there's a different type of host rock that is turning out to be the host for gold mineralization, one that had been ignored in the past. And so there's a lot of drilling effort going in there to stitch together deposits with grades that work at the metal price that we have. Incidentally, I always have to remind everybody that although we have gold at, $1,200 to $1,300, way higher than what it was, back in 2003, 2004, if you take $400 gold from 1980 and inflation adjusted to the present, it works up to about $1,270 per ounce, and it's down, bumping, threatening to break through $1,200 on the downside. So from a cost perspective, gold is exactly where it was in 1980, but whatever became low-hanging fruit back then has been harvested by the mining industry. So there isn't a lot of low-hanging fruit available at these gold prices. We need a higher real price. But now looking undercover deeper into areas where where nobody's really looked before, that is the new name of the game. And the third company which was present is Renaissance Gold. And I've talked about Renaissance Gold in recent Discovery Watch episodes. I've updated my readers about it. Last year, they acquired Bob Felder's Kinetic Gold Corp, a private company, and he became the new CEO. And he's shifted the focus away from the sort of more Walker Lane, close to surface exposures where you go in some old mineralization, you try and chase it deeper or off to the side or something like that, to going after the big Carlin-type deposits that formed 45 to 25 million years ago, and which have delivered about 300 million ounces. And the Nevada 2.0 was a big part of my workshop presentation. And in the case of Renaissance Gold, what they were doing undercover attracted Mark Creasy's S2 Resources, ASX listed, $24 million in the treasury, about 250 million shares fully diluted. A company that's really not, it's trading almost for its own cash breakup. But they optioned 3 projects from Renaissance Gold, the Pluto, the South Roberts, and the Ecru. The Pluto they've already drilled and killed and handed it back to Ren Gold. They recently drilled South Roberts, and although Renaissance Gold has not yet published a press release because they're waiting for S2 Resources to decide what to do next, S2 Resources did put out a news release saying that we proved the structural model for this target, but unfortunately the gold mineralization is not significant. We do not have a buried Carlin-type gold deposit in this particular area. And they've been eager to go to work on the Ecru project, which are these claims just north of the pipeline gold mine that Barrick operates. And they're supposed to be drilling by July on that, but there's been some delays, and it's not for negative reasons. It has to do with some sort of negotiations. They're optimistic that by September, October, S2 will be able to mount a program in that area. And again, this is in the pediment, in an area, within striking distance of, where 60 million ounces have been already outlined. And this area has never really been hit hard because you just can't see what's beneath the pediment cover. But one of the things that in conversations that came out at the conference was a project called Silicon, which is in the Walker Lane. In fact, at the far southern end of the Walker Lane, where Corvus Gold has its North Bullfrog project, and where Northern Empire Minerals last year acquired the Sterling project from Imperial Metals, which is a former producing mine, but which they stopped because their focus was elsewhere on Red Chris and Mount Poly. And the Northern Empire Group with Doug Hurst at the helm figured some fresh eyes can do something there. Well, several weeks ago, Anglo Gold, who owns the Silicon project, which Ren Gold had generated in that sort of 2013 period when they went down into this area and started snooping around looking for interesting prospects, they made a $200,000 cash payment. Now, the deal that Ren Gold did on Silicon is like this horrible deal, and it's what happens to prospect generators, farm out companies in a bear market. They, in essence, gave away 100% of the project for a 1% NSR and $3 million in payments over several years. So they just have a royalty in this project. So if this turns out to be something substantial, they will not have a huge impact in terms of valuation, but it will be a validation of their method. But what was interesting is that the Anglo Gold did some drilling on the Silicon project. They have not yet given Ren Gold a go-ahead to release what this was all about. I've been told, well, they're not sitting on some some blockbuster, no-brainer type intersections, but they are sitting on information which has really ratcheted up their interest in this area. And that silicon block sits just to the northeast of the Sterling project. And within the Sterling project in the northern part is an old little open pit mine that called Mother Lode, which Corvus Gold last June bought from Goldcorp for about 1 million shares and some royalty or something like that. And they have been in there drilling. Their property's not large enough to, support a standalone mine, but they're looking at this could be a source of higher grade feed material for our mill that we hope to build on the North Bullfrog project, which is about 20-30 kilometers to the northwest. And the drilling has helped Corvus Gold from being below $1 or so a year ago to it's hovering in that sort of 220 to 225 range. And Northern Empire has also shifted its attention to all the surrounding ground it has in this area and started drilling, and their stock has been helped up. Now, I was hoping to get a good briefing on what's going on at this conference because Northern Empire Minerals was an exhibitor. But then something strange happened Monday night. Even though they paid for this booth to be there, they said we cannot be present at this conference. And there's sort of varying explanations. Apparently there is a site visit underway which has sucked up all the key resources. But that wouldn't be an analyst or newsletter site visit because they would know here's this important conference in Vancouver. We're not going to have an overlap. So I suspect it is a site visit involving some sort of major company which is looking at this whole district. And they could have had a lower level IR person manning the booth during the 4 days that the conference was open. Many of the companies did that. They give the basic information. They take the name of the delegate and the higher ups get in touch later down the road. But they didn't even do that, even though another company that's sort of part of that general group, Bluestone with its advanced project in Guatemala, it stayed at that show. So I think there's something going on in the background. The obvious entity that is a major producer and that has a foothold in that region is Anglo Gold. I don't have any information about whether that is the company that's down there, but if I were to make an educated guess, if they have become very excited about the silicon project, where they have, pretty much locked up 100%, and it's right next door to this old, epithermal district that's showing new signs of life, it would be in its interest to try and expand its footprint in that entire area. So we will see what comes out of that. The Northern Empire project is really not advanced to allow any sort of strong deal except possibly a farm-in, and they're sufficiently financed to not need anybody's farm-in project. So if there's anything going on, it's probably on a much different level, and if something substantial were to come out in that area, that would be another shot in the arm for the resource sector, because we're starting to see these sometimes big, as in South 32's takeover of Arizona mining, sometimes medium-sized, as we are seeing in with the Dalradian cash takeover. We're starting to see these injections of capital, takeover bids, cash, where you really have no choice. You're not going to get paper in a company whose price is then going to go down afterwards. We're starting to see little bubbles of capital showing up in the sector, and we'll see if this whole new emerging area there with Corvus Gold and its North Bullfrog and Mother Lode deposit and Northern Empire with its Sterling project is going to end up also creates a surprise liquidity event for everybody.
We'll have more with John Kaiser right after the break.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Welcome back. We're speaking with John Kaiser. John, did the Sprott conference get you any meetings which would help us out with any existing Discovery Watch juniors?
Well, Jim, people often ask me, how is this conference for me? And for me, it's always a function of getting access to people, technical people, not just some low-level IR person at the booth who's not going to teach me anything I don't know, but seeing technical people present. And one of the opportunities that I was able to have was to sit down with David Gale, who is part of the exploration team under Carl Edmonds at SSR Mining, which has various mines like Marigold in Nevada, a low-grade mine. I'm not particularly interested in those projects. I'm more interested in projects such as the Fisher Farm-In from Eagle Plains, now Taiga Gold in northern Saskatchewan. And in this case, it was the SK Mining Corp farm-in on the SIB Lulu project just south of the former SK Creek mine. They did that deal last year. It was a fairly aggressive deal. They can earn 60% by spending $12 million over 3 years. Last year, they went in there and spent $4 million. The results, when you read them, you say, wow, okay, that accomplished nothing. Good thing SK Creek Mining didn't undergo hideous dilution to raise that money and do this. And so the way they put out the news release earlier this year, it left me kind of puzzled. It didn't look very exciting what you accomplished, and yet you've committed to spending another $4 million in 2018. And I hear sort of rumblings that they're not going to quit until they spent the entire $12 million. So I became quite curious about what is it that they are chasing there, that they're willing to sink at least $8 million without having any intersection from that first $4 million. And David Gale helped explain some of the history of this exploration in the SK Creek camp. The SK Creek deposit was discovered in 1989 or thereabouts, and it ended up becoming one of the richest gold-silver mines in North America. Homestake ended up owning it, and both Carl Edmonds and David Gale worked for Homestake in that period before Barrick took it over, and they looked very hard along the southwestern strike of the Salmon River Formation that hosts the SK Creek deposit, looking for repeats of this type of VMS system. And the Salmon River package consists of a younger layer of basalt, which is basically barren, came in after all the mineralizing events happened. Then a mudstone layer, which is what hosts all the rich base metal and gold-silver mineralization. And then a rhyolite unit, which is a volcanic unit that sits underneath, which ends up being the unit through which the feeder system goes and scavenges material, and then sprays the metal-enriched fluids onto the ocean floor, where it sort of settles down like a pie or around, or sometimes more in an elongated shape when there's a current dragging the smoker system down the current. And these forms these incredibly rich, massive sulfide deposits. And when you have something like this, you usually have multiple smoker systems like that forming deposits over, pretty good area. So if you find one of them, you have reason to hunt for another elephant of this nature. And unfortunately, the stratigraphy has been tilted on its side so that it's not like it's still flat as a layer cake the way it used to be, and you just look for these conductors and blast holes at them, and then one of them is going to turn out to be a metal-enriched VMS system. So here now you have to kind of drill it from an angle. And what made the project in the SIB Lulu area particularly difficult is that there was a local thrust fault, the Coulter Creek thrust, which basically somehow detached a big chunk of the land and pushed it westwards, so that what you saw at surface was not really what was, if you went down 200, 300 meters, there was going to be something else there. So you had to be drilling these blind holes from the west to intersect the stratigraphy at some sort of near perpendicular angle so you could start to see what was going on. Now, when these guys were during the home state days, they looked hard all the way down to the SIB border, and they found that the system, the rhyolite unit, tended to pinch and swell and was not particularly robust farther to the south from SK Creek, and they never really did find anything of interest. But there was a big felsite, which is a rock, a different type of rock, which intrudes into this layer cake, and which may even have some relationship to as the heat engine for these smoker centers. And there's a big one of those that sits there close to that border. And what last year's drilling focus was to start down in the area where the Lulu zone sits and sort of march offensive holes north close to the border. And they found that when you went north of the Lulu zone, that the stratigraphy seemed to fade out, and but then closer to the border it got better. And so they're kind of interested in drilling more holes in the northern part, but it's kind of close to the border area where there's also these fragmented claims that mess that up. I think the more important focus is to head south of the Lulu zone. Now, they now think, based on the work they did last year, that the Lulu zone is not a detached tip of an iceberg, that it is in fact a puddle that formed by itself and has not really been detached from something. But obviously the fact that it is present means that there's a system, a smoker system going on somewhere. And now they've noticed that as they head south, the rhyolite unit is thicker. And that's important because it means there's more opportunity for significant enrichment to take place and to be sprayed out into what becomes a mudstone horizon. So this year's program is a 7,000 to 9,000 meter program that just started. It'll involve drilling even longer holes than last year. They're trying to trace this rhyolite unit deeper down. And they're using this classic, what I alluded to earlier, geoscience method of vectoring, looking at the alterations, studying the minerals and metals that are showing up in the unit, trying to find out if they're getting closer to that feeder system, which will have, radiated well beyond where the deposit itself exists. From my conversation, they do not yet have a precise quarry in mind, but they also did a VTEM survey. They have not really reported on the results. It is a deeper penetrating survey. It is intended to help them see the structural discontinuities in that, but also pick up any conductors that might be present. And they've extended this right down to the southern part of the project where it's pretty forested and nasty with all the Devil's Club and that, and hasn't been prospected and mapped very well. And they have done their own mapping down there, and they say, well, this area, the Salmon River's rhyolite unit was supposed to have faded out in that area, but there is evidence that it's still there. So they are continuing to pursue this idea that this SK rhyolite unit is very different from other rhyolite units in the Golden Triangle. There's something about the low titanium levels or high titanium levels in it that make it stand out as different, and that they're not sure what the relationship between that is. But they're saying there is not much of this elsewhere in the Golden Triangle, which is why Carl and David Gale are so obsessed with this whole unit down there, and why they think there is a size of substantial prize, possibly rivaling even the original SK Creek, to be found. And I think that's really cool, because you need this sort of vision, and you need the backing to, spend the years and the money to chase these targets, to vector in on it, and not call it quits after the first year's program doesn't deliver validation that, yes, we have a winner. No, we are still chasing the winner, and we have reason to continue winner. Great, continue, carry on.
We'll have more with John Kaiser right after the break.
I'm Kelly Jennings, CEO of Powerband Solutions. Powerband is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. Powerband Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
Welcome back. We're speaking with John Kaiser. John, were there any big surprises at the Sprott conference in Vancouver?
Well, I thought it was a big surprise that Peregrine Diamonds had a booth at this conference, and I wasn't aware that Sprott Global had backed it in any way. So I was thinking, well, maybe the Friedlands, who have not spent very much on promotion at all, are shifting their strategy, that they are going to start promoting Peregrine Diamonds. Now, the other two Robert Friedland companies there are Clean Tech with its nickel cobalt project in Australia, and of course Ivanhoe Mines with its Kamoa-Kakula project in the Congo, and its assets in its platinum project in South Africa. And those ones have been sort of the ones Robert has promoted in his energy metals talks. Diamonds have nothing to do with energy metals. So it was curious that the Peregrine Diamonds was exhibiting at this show. And I did talk to Jennifer Pell, who was manning the booth, but she really didn't have anything to be able to add, other than that the PEA which they put out not too long ago, which suggests an NPV of $700 million, and the stock's been priced at $60 million, and you're sort of thinking, well, why is it being discounted so badly from a PEA that's backed by over $70 million of exploration work, and whose diamond project, while not in the 30 to 50 million carat range, definitely looks like these are nice diamonds. There's room to find more. Doesn't include an underground mining scenario. Why is this thing so undervalued? And of course, in the last, since 2014, we have seen 3 deeply discounted rights offerings, which have raised almost $30 to $40 million, and of which the Friedlands themselves always ponied up their pro rata share, in some case more, because they guaranteed the rights offerings. The first one was at 21 cents and dropped the stock from 40 cents and included a warrant, and most of those warrants ended up being exercised a year later. Then everybody was rewarded with a 10-cent rights offering in 2015 or 16, and that was a $7 million financing. The first one was $15 million. And then in 2017, last year, there was another 10-cent rights offering, guaranteed rights offering, that raised another $10 million. And even though all this money was enhancing the fundamentals of the project, the Chibiak Diamond Project on Baffin Island, investors were not being rewarded by an increase in the valuation of the stock price. And this uneasy feeling had seeped into the markets that the Friedlands were really demoting this company and preparing it for a privatization. Meaning that if they thought the asset was so valuable, then and the market was not giving it any credit, well, then we'll just privatize it at what the market thinks it's worth, thereby taking away any of the upside that the minority shareholders had been betting on since 2009, when the Chidliak project replaced DO-27 as the flagship story for the company. So the big surprise was on Wednesday morning or Thursday morning, the booth was gone. The Tom Peregrine talk at 3:50 explaining why Peregrine Diamonds is great was canceled, and there was a 24-cent accepted cash takeover bid from De Beers, which values the company at about $107 million. It's 50% premium above the 16 cent price which the stock has been at, and everybody's kind of moaning, saying, okay, it's at least higher than it was before, but why are they selling so cheaply? I mean, their average price must be 15 to 17 cents by the time you add up their share of the 21 cent and 10 cents rights offerings. And Robert Friedland has always been keen about the diamond sector. I mean, Diamond Fields was all about diamonds, where he failed terribly in creating any real value in the diamond sector, but delivered the $4 billion nickel copper Voisey's Bay discovery. And so there was always hope that somehow Peregrine Diamonds would become Robert Friedland's diamond story. And so this looked like a complete capitulation, throwing in of the towel. And from the initial feedback I got from subscribers was, pretty disappointing. But I looked at this and say, are the Friedlands really that feeble that after Eric Friedland has, raised and spent over $60 million on DO-27 and $70 million plus on Chidliak, and actually has something that's in the money? Are they in the business of doing charity deals for De Beers? And then I started to think about DO-27, and I said, well, DO-27, it's not good enough to be a standalone operation, but it's within trucking distance of the Diavik operation and the Ekati operation. And so we had this year the $1.5 billion takeover bid of Dominion Diamonds by the Washington companies, which is a giant U.S.-based service company. And so they own the 40% of Diavik, and they now own 100% of the whole Ekati infrastructure, which at some point becomes a reclamation liability, but perhaps something like DO-27 could extend the life of that operation longer than otherwise would be possible. And so there would be strategic value in that DO-27 72% interest that Peregrine has, which is absolutely worthless to De Beers because it has no mining footprint in that Lac de Gras region of the Northwest Territories. So I'm thinking this thing is really an opening bid. Now the market has quickly moved the price up. Its stock is offered at 24 cents, so that anybody who who wants to buy at that 24 can get it. And the bids are large at 23.5 cents. So there's your half-cent differential between what you need to what you can sell it at to get the money now, and 24 cents is what you will get by just waiting 6 to 8 weeks for this bid to end. But the news release included that if there is a superior bid, and they openly acknowledge that there is a possibility of a superior bid, De Beers has 10 days to match it, and they would accept that. And if it ends up being something they don't accept, they get a $5 million breakup fee for their effort. So De Beers possibly could scoop this project fairly cheap for about $107 million and develop the next diamond mine on that Canadian diamond mine on Baffin Island with plenty of exploration potential. The focus in the last few years has been on CH6 and CH7. Or somebody like the Washington Group or Rio Tinto could come in and say, we can afford to pay 35 cents, maybe even 40 cents, and we get this asset for then maybe, 150 to $200 million worth of cash, and we get the DO-27 asset for free and can figure out, how to phase that into our, Northwest Territories operations. So I've written to my subscribers is hang on, don't sell yet. Let's wait and see if any of these parties come out of the woodwork. And then there's a third possibility that a company like Lucara, which does not have enough money to pay cash and wouldn't want to because it needs to raise money to expand its Karo mine in Botswana for underground mining. And they recently had Ira Thomas become the new CEO. They have this little blockchain story that they've been talking about, but they really don't have a significant future production profile for which this would be particularly useful. So having Lucara come in with a paper bid could be very interesting. It would give Ira a significant, not huge in terms of monetary value, but, a project with good diamonds in Canada as part of her base. So I'm waiting to see if we get the value of this transaction increased by a competing bid from Washington companies or even Rio Tinto itself, which for a while, like BHP, thought, we're out of diamonds. This is too pitiful a space. We don't want to be in it. But they've made a decision that they are going to stay in diamonds and are on the prowl. And then if Lucara gets backing and the Friedlands themselves don't mind getting Lucara paper for their 42% interest in Peregrine, then we have a dynamic new story. The bitterness of the 24-cent financing becomes lessened. But in any case, the important thing is the Peregrine diamonds has been a wet blanket on the diamond sector because everybody has looked and said, if you spend this much money and produce these kinds of results which other juniors dream about, and this is the sort of valuation, the reward you get at the end of the day, what the prize is worth, then why are we in diamonds at all? So the disappearance of Peregrine diamonds with its anti-Friedland effect, this is going to be a big shot in the arm, and at the minimum, there's going to be like 60% of that $107 million goes into the jeans of a lot of small minority shareholders who will probably want to redeploy it into something where management doesn't seem to have a death wish for the project, but actually wants the project to go up and be higher valued rather than be cheap and be given away to De Beers for a pittance.
John, thank you so much for the update.
You're welcome, Jim.
We've been speaking with John Kaiser, his website, kaiserresearch.com. I'm Jim Godley.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.